Hello traders, and welcome back to my YouTube channel once again. So today's video will be about the Asian session liquidity, and hopefully this will be the last video in the liquidity series that I started earlier. Okay, so in today's video I'm going to be showing you how to incorporate the Asian session liquidity into your trading, and I bet you that if you should stick to the end of this video, it is going to change how you see the market in terms of your POI selection, your order block selection, demand and supply, whichever way that you call it. All right, and I'm also going to be showing you the indicator that I use to mark my Asian session. Okay, I'm going to show you the indicator together with the settings that I use. Okay, so before we jump onto today's lesson, if you are not subscribed to this channel, kindly hit that subscribe button, turn on post notifications so that you don't miss other future important videos. Okay, so with that being said, let us jump straight onto today's lesson. Okay, welcome back to the chat, guys. So the Asian session liquidity, what is it and how can we take advantage of it as traders? Okay, so the Asian session itself is one of the major sessions that makes up the Forex Daily Cycle. Okay, so we have the Asia, we have the Europe. The Europe consists of the Frankfurt and then the London sessions, and then we have the New York session. Okay, so in order to incorporate this strategy effectively into your trading, there are certain things that you need to note down. Okay, so the first thing is always market structure. That is the basic thing you're supposed to look at before you start to incorporate any strategy into play, or before you start to press the buy or sell button. Okay, first things first, market structure. Okay, then the second thing that we need to look at will be the Asian high, and then also we look at the Asian lows. Okay, and then also we are going to look at the Frankfurt Open. The Frankfurt Open, you're going to look at the highs and the lows of the Frankfurt Open. And then after that, you're going to look at the mid-Asian range, okay? The equilibrium of the whole Asian range, okay? Great. So we need to also know the timings of these sessions, okay? So let us run through that quickly, okay? So the Asian session itself it has two parts, okay? We have the Sydney and then the True Asia, okay? That's what I call it the True Asia, okay? So the whole Asian session starts from 10 p.m. to 6 a.m. in the morning, okay? So I'm using GMT over here, so you can convert it to your local time wherever you are, okay? So it starts from 10 p.m. GMT to 6 a.m. GMT, okay? And like I said earlier, it has two parts, okay? So the first part is the Sydney session, which opens at 10 p.m. and then it ends at 2 a.m. GMT. And then the True Asia begins at 12 a.m. to 6 a.m. Okay, so that makes up the whole Asia session. And then the European session, which consists of the Frankfurt and the London, the Frankfurt opens at 6:15 to 7:30 a.m. That is the range that you're going to be looking at. That's the Frankfurt Open, 6:15 to 7:30 a.m. And then the London begins at 8 a.m. to 4 p.m. GMT. Okay, and then the New York begins at 2 p.m. to 10 p.m. Okay, so we realize that between the New York and then the London session, we have some overlap around 2 p.m. Okay, so we get that overlap over there, right? So the whole cycle repeats itself. So Asia, London, New York, back to Asia, like that. Okay, so how does the Asian session looks like? Okay, so let me first start with this drawing on how the Asian session looks like. Okay, so like I said, the Sydney begins at 10 p.m. So between 10 p.m. and 12 a.m. we have the Sydney highs and lows printed. Okay, then we're going to have the Asia, the True Asia, to begin from 12 a.m. Okay, so between 12 a.m. and 6 a.m. we're going to have also between 12 a.m. and 6 a.m. we are going to have the True Asian high and lows printed. Okay, So we're going to have that. We're going to have something like that. I mean, this is just a pictorial drawing. Okay, so if you go to the chart, it's not always as clean as this. Then from 6:15, we are going to have the Frankfurt. Okay, the Frankfurt open something like this, right? Something like that. Let me change this one to blue. Okay, so you're going to have something like this, okay, as your whole Asian session. So rectangle, let me separate that. So this is going to be your Asian session. Okay, so from here begins Frankfurt. So the Frankfurt is not part of the Asian session, so I don't include that into the I don't include that in the rectangle or the square, whatever shape that you call it. So yeah, so this is how the whole Asian session is going to look like. So how do we incorporate this with market structure? Like I said, it is always important to use this concepts in confluence with market structure. You don't just learn these and then you start to just use them anyhow. No, you should always use them with market structure. Okay, so if you're a smart money trader, after price has made a break of structure, what we know is that price should return to what? An order block below over here, a POI, a demand zone, an IFC, whichever way you call it. And then after this change of character or change of intent, as I will call it, some traders will even start looking for what? Buys. Okay, some traders will have their buy limits set. Okay, and then traders like me who wait for further confirmations will be looking for this confirmation in here. Okay, so the rectangle that we have over here is the Asian session. Okay, so like I said, traders who just have their buy limits set after the change of character or change of intent might have set their limits already, and then they might have been triggered into the trade. And then traders like me who is looking for this confirmation, this further confirmation, might have also had we might also have our confirmations, and then we might have also what? Set our limit, and then we are also looking forward to target the highs. Okay, so looking at this, we can see that both smart money traders have their what? Their trades in. I mean, our trades are triggered. Okay, so we are just happy because our trades have been triggered, and then all we will see is that price just comes back, rates our stop losses, and then probably give us another reaction to the top. Okay, and if you don't know what's happening over here, you might think the market hates you or something else, but the reality of what is going on here is that you were picking your point of interest, or you are picking your order block on an Asian low, which is a major liquidity point. Okay, so like I said, this rectangle is the Asian session that I have specified over here. So if you are picking a POI or a demand zone or an order block over here, I mean, you are standing in the way of a major liquidity. So definitely you should expect price to come back and raid that low before pushing up. Okay, so that is why you sometimes see some of these things happen. Okay, so let me show you real examples on the chart. Okay, so if we come here, we can see price making a break of structure to the upside over here. Okay, so break of structure to the upside, and we can boldly tell that our demand zones will be from here. Okay, this will be our demand zone that we are looking at, even though we had another one here where price came for the first time. Okay, why is this candle a demand zone, or why is it a point of interest or an order block? This is the candle that led to the break of structure of this level. Okay, so it becomes a decisional point of interest. Okay, great. So we realized that even after price reacting off this order block, we had what? Levels of imbalance over here, fair value gap or whatsoever that you're going to call it. And so you might be confident enough to say price is going to do what? It's going to come back to this level of demand over here. Then we can look for buys. Okay, But then what do we see? When price came in, especially those traders who don't wait for confirmations, you're going to have your stop loss what? Smashed. Why is that so? Okay. This is the Asian low. This is the Asian high. What are they? They are major liquidity pools. So if you are taking your point of interest, if you're taking your order block from an Asian high or an Asian low, I mean, that is a deadly zone that you are trying to pick. Okay. Especially when that Asian high or Asian low has not picked liquidity already. It will be a very deadly zone to look for trades. Okay. So that is why you have this demand zone over here invalidated. Okay. So after that, the next one, we can see over here that internal structure, we had price breaking structure to the upside. Okay, so we have a BOS over here, and we have a clean demand zone over here. So what do we see? Price comes into this other block or demand zone. Probably this first confirmation wouldn't be clear enough, but this second follow through break or structure was clear enough. Okay, so after this break of structure to the upside, we have had a major break of structure over here, an internal break of structure over here. Sorry, we've had price retrace to the other block or demand zone. We've had a first break of structure, first confirmation, might not be clear enough. Then we have the second one over here, and that is very, very clear. And so you might be confident enough to look for trades in here. Okay, and what happens is that if you had your buy limit set in here, your stop loss would have been hit. Okay, and why is that so? Okay, first of all, like I said, the things you need to consider: we had the Asian high, we had the Asian low. Okay, this is the mid-Asia range. You see the candle over here in the mid-Asian range. So we had a reaction of here. Okay, so if you were looking forward to take that buy, the reason why your stop loss was swept, first of all, the Asian low price is supposed to come in and take out that Asian low, which is a major liquidity pool. Okay, so after manipulating the mid-Asian ranges, it comes back and takes out the Asian low. Okay, apart from that, if I should put my crosshair on this candle, what do you see? You see 7:30 a.m. Okay, and if you remember from the beginning of the video, I was telling you that one of the things that you need to consider is the high and low of the Frankfurt Open. And what did I say? I said that the Frankfurt opens at 6:15 a.m. and then ends at 7:30. And so that is basically the low of the Frankfurt Open, which is also a major liquidity pool. So having this Frankfurt low and the Asian low in confluence, you realize that you have two major liquidity pools in place over here. So if you're having your bias limit here, okay, it's gonna smash your stop loss as clear as day. And just like it happened over here, it just smashed your stop loss, and then we had that reaction to the top. Okay, another example. So in here, what do we see? If you're a smart money trader, we have that break of structure to the upside, sorry, to the downside, and we have 2 points of interest that we're looking at. We had the origin supply zone over here. Okay, so that's the origin POI, and then we had a decisional POI over here, which also happened to be the Asian high. Okay, but I will explain to you why this Asian high or this point of interest, which was also in confluence with the Asian high, did not fail. Okay, you realize that it respected it nicely. Initially, I remember this trade, I was having a bias from somewhere here, and I was looking forward for the Asian highs to be raided. Okay, if I get a screenshot, I'm going to put it on the left side on the screen. So I was looking for that Asian high to be raided, but it was respected. Why? We had that relatively equal highs over here. That is liquidity. Okay, the Asian high has already taken liquidity, so there was no need for price to come back and take another liquidity. So price reacted off that Asian high nicely. Why? Because of liquidity. Okay, great. So even in here, if You're also looking at price making what? A break of structure. You've had that pull, so this is the range. And as a smart money trader, you know we have that follow through break of structure. And so you were looking for price to come in here to look for buys to at least these supply zones. You realize that it just smashed through that level. Why? Because this level was a Asian low, which is a major liquidity pool. Okay. After that, what again do we see? We see this low over here, which makes a high. Okay, so we've had that break of structure. We have 2 points of interest to consider. We have the first one over here, which didn't respect, and then the second one over here. Okay, but then all what we know is that, or all what we are looking for is that price has come into what? Premium zones. Sorry, discounted zones, so we can look for buys. Okay, so you see price come into discounted zones. And what do we get on lower time frames? I'm not going to go into lower time frames. So yeah. So what do we see? We see price give us that confirmation. And so we are confident to look for our buys in here. And this scenario or this example is one that has to do with the mid-Asian range, the equilibrium of the Asian range. Okay. So if I should take my fibs and extend it from the Asian low to the Asian high, we realize that price reacted off the what? The mid-Asian range. And if we should look below that mid-Asian range, we can see that this POI was what? Right below that mid-Asian range. That is why we had price move from this level to the top over here. So even if we are looking for confirmations, okay, after price tapping into this POI within that mid-Asian range, you could have had that confirmation on lower time frames to look for buys to the top. And this could have given you like 1 to 5, 1:8 or something. Yeah. So another example, let's see another example. Yeah. So in here also, what do we see? We see price making lower highs and lower lows. Okay, lower highs and lower lows. So we see price making that lower highs and lower lows, and we are looking forward to do what? To sell from this range, okay, from that supply zone or that order block. Okay, but before the order block, what did we see? We have our Asian low printed and our Asian high printed. Okay, so if you're a smart money trader, to smart money traders, once price has come into that supply zone, what do we get? We get that confirmation to take our sales to the downside. Why? Because we are flowing with the market, we are bearish. Okay, so in scenarios like this, personally, I am going to what? Hedge. Why? I see this candle over here, which is a very good point of interest within where? Mid-Asian range. Okay, so if I get this confirmation over here, first of all, I'll make sure that I am taking the buys over here. Then after that, I'm going to hedge, or I'm going to look for sales as hedges against the buys that I've taken, and then I'll just leave the market to decide. So in this scenario, we can see that the buyers were winners. Why? Because it was reacting from a point of interest within the mid-Asian range. That is why you always need to focus on these levels, okay? And that is what led to a bullish change of intent right here, okay? So another example over here, if we should look here, we had a clean break of structure over here also, and we might have been looking at these two POIs, this level over here as a supply zone, and then the second one over here as a supply zone. Okay, so we have two POIs to look at. If you are a trader who doesn't wait for confirmations, you realize that even this level over here is a two-edged liquidity pool. Why am I saying that? We have a double top over here, which is liquidity, and then apart from that, this same double top is the Asian high. So we have a two-edged liquidity pool over here. So it will be very, very unwise to just have your limit set, hoping for price to just tap in and then move in your favor. Okay, so what do we see? We have price come in, raise that level of what? Supply. okay, then gives us that confirmation that it wants to what to sell. Okay, so we are looking at this level once more, and then probably just on a 15-minute, you might have had your trades triggered in. Okay, and then right into the next day, we had price come back into the same level to then sell. But you see, before it came into that level, what did we see again? We had that Asian low, we had that Asian high. Okay, we just know that we are within this range, and so when price is coming back, we are still valid. Okay, but then we just need any of the Asian highs and lows to be taken. In this case, we have the Asian high what taken where into that level that we were looking at from yesterday. Then after that, we had that confirmation to look for sales. Even from the 15-minute is very clear. Okay, so we can look for sales from here to the downside. If we miss that after this break of structure, again, we have another opportunity to take another sell to the downside, just like that. So series of opportunities to take the sells to the downside. Okay, all of these things in line with market structure. Okay, so another example, let me just look for another example. I think yeah, so in here also we had price making lower highs, lower lows, lower highs, and then we had lower low. Okay, and then we had price changing intent over here. I call it a change of intent. You can call it a change of character. So we had price making that bullish change of intent. So I know price was bullish, and so I was looking for what price to return to a level of demand in here. Okay, so what did we see? We realized that after price making that push, we had what another push to the upside. Okay, and so we know that okay, if we've had that push, probably this from here to this point also is valid to look for what to look for buys in here. Okay, but then it will be very dangerous to look for buys within that zone. Why? Because it is in confluence with the Asian low, and so that liquidity needs to be taken, and that is exactly what happened. Liquidity, the Asian low was taken right into where that demand zone that we're looking for. Then we can now look for buys to the upside. Okay, yeah, so another example, I think this should be the last one. So again, we have that break of structure. Okay, this price was bullish and then it switched to bearish. Okay, and so we had this supply range. If it was just a candle, we would have taken just this small candle up here. Okay, but we're looking at the range, and that is exactly where price came into. Okay, so price came into that supply range. Okay, and if you go into lower time frames, you realize that we had that beautiful confirmation, and so you're looking at price to do what? To sell from that point. Okay, but what happens? Price makes that retracement, probably not into the preferred candle, and then we had that follow through break of structure. Okay, some smart money traders will be looking at again this level that when price comes in, you're going to sell, but then it will be very deadly because this level that they are looking at is in confluence with the Asian high. Okay, so this is the Asian high, you have the Asian low. Okay, so what do we see? When price came in, it raided that Asian high, gave us that confirmation after that, and then it sold massively to the downside. Okay, to at least this, to clear this Asian low from the previous day. Okay, so even in here, I think this was also a recent one. Let me just touch on this. So let me clear that. So in here, what do we see? We see price break this level and then break this level again. So as a smart money trader, I just knew that price was supposed to do what? Supposed to come in here, and I can look for my confirmations to buy. Okay, but then if I should take my fibs once more and then I extend it from the low to the high of this leg, we realize that we have 2 points of interest or 2 demand zones to look at. Okay, so we have that. So let me just clear the fibs. So we had that, and we had that also. Okay, as our demand. And if you look closely, okay, what do we see? When price came into this level, it gave us that nice reaction on lower time frames. It gave us that nice reaction. And so smart money traders will be looking forward to do what? To buy in here. First of all, I just know that this point that we are looking forward to buy is the Asian low. It's a major liquidity pool. I'm not supposed to buy over there. Okay. And moreover, I have another POI over here, which is fairly in a very good position with regards to market structure to look for buys. Okay. But I don't just place my buys over here. I always wait for confirmations. Okay. So if you were having your buy limit set over here, your stop loss would be raided just like that. So I remember that I even have this on my Instagram page. So I was looking at the mid Asian range over here for myself. So I just knew that these buys over here was going to be fake buys for smart money traders. So when all smart money traders were looking for buys because of confirmation, because of market structure, I was looking for sells. Okay, from here to this demand zone, then I can just take another confirmation for the buys. But you can see that we didn't get that confirmation. When price got into this level, the bears were still holding. Okay, so we had no reason to do what? To buy. And then we had another follow through break of structure over here, and then price continued to what? To sell, and then we had that break of structure. Okay, yeah, so that will be it for today's video. So the indicator that I am using, okay, so the indicator is called the Asian range kill zone. Okay, so if you search the indicator pane of the Asian range kill zones, you're going to have that, and the settings that I use is this. Okay, so you can use the settings right there. Okay, so that will be the end of today's video. If you really had good knowledge from this video, kindly hit that like button and leave your comments in the comment section. Okay, so see you in the next video.